Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome back. Good to see all of you here again for another video. Now, for those of you guys who are new to the channel, then this is where we talk about all things market profile. For me, it is all about doing what is right as a professional. I know there is a ton of stuff out there on YouTube that lots and lots of people are doing, but in my opinion, there isn't a lot of professionalism out there when it comes to this business, right? It's kind of the Wild West, and in reality, it should not be that, but that's exactly what it is. And there's very little any of us can do to change that. All we can do is contribute the best kind of value in the most honest way that we can, regardless of how that looks, regardless of how many views I'm gonna get. My YouTube channel is really small. I always say this, it's a tiny channel, hardly anybody watches it. For the people who do, they get the best value, right? But it doesn't matter to me, right? I make this stuff because I want to let you guys know, but of course, I'm a little bit selfish here. I make it because I like it. I enjoy making content about trading and investing. When I was younger, there weren't these mediums. You couldn't share this kind of information. There was literally, other than your colleagues, there was literally no one to talk to, or other than, actually, well, when I was young, but other than maybe your friends. And to be honest, when I got into trading and investing, when I started to feel the bug, you know, there was no one really to talk about it with, so it was just one of those things. So even now, you know, unless you're in a professional environment where this stuff is done all around you, you're not going to have anybody to talk to, right? So this is a fantastic way to reach out and build a community, and that's what we kind of do here. That's what I do, right? So again, I guess this is a perfect opportunity to kind of let you guys know that I have an amazing Discord server where you get like a ton of free content, where you can learn most of the stuff you need to learn about trading and investing, so that you can go on and do amazing things for yourself. And I don't have to charge you for this, right? Because I do this in my own time when, you know, when I feel like I want to do it. Just like I'm making this video for you now, it's maybe 20-30 minutes of my time, and that's it. That is a small price to pay in order to share, you know, what I've gained over 15 years plus now of trading the market.
It's pretty small. So small.
So I've traded pretty much everything, and I'm, you know, there's probably nothing out there that still exists that I haven't touched. Everything from grains in the commodity markets, to metals, to interest rate futures, to bonds, to forex, to stocks, to futures options, to stock options. Now, so those of you who follow me on the Discord channel, you would know that I do a lot of premium selling. One of the things I do is I sell premium. It's a steady way to make income. So if you don't know anything about that, you should check out the Discord server for sure. So anyway, guys, I'm not gonna spend too much time laboring around this stuff, but I really wanted you guys to know that it's important to be in a community where you're going to get encouraged, where you're not going to get put down because you like to talk about trading, or you're not going to get, you know, looked at weird. You know, I think it's like an awesome thing. So check out the Discord server. All right, so today, what did I want to talk about? Today, I wanted to talk a lot about professional trading, and I'm going to show you some really cool ways that you can look at the market. And I'm going to go off what I've already spoken about, right? So, and I'm going to use cable here as an example, and I'm also going to show you this on crude oil. For those in the Discord server, you've already seen my post on this, and I'm just going to go over it again. And this should be a really good professional trading strategy that you can employ, and you can start to get the sense of how professionals view the market and how professionals trade the market. Okay, so I'm gonna give you a step-by-step breakdown, and guys, I kid you not, what I'm about to show you, not many people are gonna take the time and show you this, and they're gonna charge you thousands of pounds to even show you less.
Easy, my money. That's no money. That isn't my money.
But for what I'm going to show you today, hopefully this brings you a little bit closer to you becoming at some point a better trader. All right, so let's take a look at, by the way, for those of you guys who don't know, this is a time price opportunity chart. As you know, on this channel, we are primarily about market profile. So most of the stuff I'm going to show you is going to be on a TPO market profile chart. What I would do is I'm going to also show you what that looks like on a candlestick, so you're not too off base with what we're talking about. So so we can discuss things with a bit more clarity, I suppose. So to hammer that point home, I'm just going to bring that chart up here. So if you look very closely, you can actually see this is a cable. This is a candlestick chart. This is what you're used to. And as I always say to you guys, that you guys love Forex. So I'm usually doing a lot of my examples on Forex, but I promise to the guys who've been asking, do more videos that don't have Forex pairs on there. I promise I will. But I think in order for everyone to be included and grasp what's going on in here, I think it was important to do a lot of the videos based on Forex first. But not to worry, I will. Most of the concepts I talk about here are applicable in all markets. It's not just Forex. But at the end of the day, you guys love Forex. So, as they say, you can't fight the YouTube algorithm. You know, and to make a very, very interesting analogy, I do a lot of premium selling, which I think is absolutely underrated. The amount of money you could be making steadily selling option premium is just frightening, right? It's just frightening. And funnily enough, in the institutional space, selling volatility, as it is called, it's been the biggest game. It's a last kept secret. It's been the biggest game in town for years. And thanks to platforms like Robinhood and everyone else getting to mobile-based trading with the less statistical tools and edges, it's going to give premium sellers even more of an opportunity in the future. And again, thanks to zero DTE options and all the other stuff that's been pushed out there where the volumes are growing, it's just great. Today, if you're a premium seller, one of the things I do is I sell put premium, and it's a steady way to make weekly income, monthly income, depending on the calendar and strikes that you're dealing with. But I'm not going to get into option selling right now. But what I wanted to say to you guys was that one of the things that I do is I sell premium a lot, but I don't see a lot of YouTube channels out there even talking about it, and it's for good reason, right? And this is what I always say about social media, is that people will push in your face what you are searching for.
What do you want? What do you want?
It's not that simple.
What do you want? God damn it. What do you want?
Right, so even if they don't have much knowledge or they know it's plain blank wrong, they will still do it because YouTube will pay them to do this. And this is a really important point. So I wanted to do a lot more videos on selling premium, but think about it. If I did that, you guys wouldn't be here, because no one is searching for selling options. No one. Like literally, I think I did a video on that the other day. I think maybe about 20 people saw it.
God damn it!
So at the end of the day, you know, there's a limit to what topics we can get into, and that's one of the reasons I have the Discord, is that I can get into this stuff a little bit more. So some of you guys who come and watch this video, you might be interested in that, because everyone's here because they want to make money. They're not here to, you know, to mess about, and that's kind of how I see it. Moving on. So we got a candlestick chart here of cable, and what did we talk about? So let's just zoom in here on this. So again, one of the concepts that we often describe and talk about is liquidity. Right. So step one, where the liquidity highs and where the liquidity lows. So we got a liquidity high here, at 126.43. We got a liquidity high here at 126.55. What lies above liquidity highs? Go for it. I know you know this. Stop losses. Why are there stop losses there? It's because people who are short the market are going to put buy stops up there. And what are buy stops? Right? So they're buy stop orders and buy stop loss orders. So what are buy stops? Well, they're orders to buy the market and in some cases stop a trader out of a trade, or it's an order to buy the market into continuation. So you're going to see a flurry of these kind of orders here, and this is typical when you hear some of these phonies out there talking about breakout trades.
You're all bastards!
Or look at this trend line, the market's breaking out. You know, I mean, I could draw one of those kind of trend lines that they like to draw and say, oh yeah, big breakout. So you would see them do stuff like, and it's just, it's not upsetting. It's just sad. So you'll see them do stuff like this and say, hey, look, it's breakout time. Let's go long. Or, you know, you'd see another trader in the same theory. So let's just delete that line. So you'll see another trader say stuff like, oh, look, yeah, that was the trend line there. And then it hit the trend line and bounced off, right? So you get a lot of these subjective ways of looking at the market, and that's perfectly fine because at the end of the day, you know, people see and believe what they want to see and what they want to believe, right?
I'm gonna make this pencil disappear. It's gone.
So what we tend to have, the reality of the situation is that usually you're just looking at the tops of liquidity highs and that's all it is. So what happens here is we get this flush. Everyone thinks the market's going up, so everyone goes to go buy, and who's selling to the buyers? It is the people who are already long. So they're getting short now or liquidating their positions, and then you clear the stops and then we trade back into value. So we trade back into what is fair prices, right? As we say in market profile, it's fair prices. And then what should happen next? We start to look now for liquidity lows, right? So we start to see that. Now this has absolutely no bearing on the day frame. It doesn't matter if this is a weekly chart, daily chart, an hourly chart, as I'm looking at here. So typically people who are like intraday trading will be looking at stuff like this. But does it mean I have to trade every day? No, I only want to trade at liquidity highs and liquidity lows. Gives me the best opportunity. So what's happened here? We've traded under a liquidity low. We are supposed to rebound back over 125.75 if we are going to get into long positions, right? Other than that, we don't do it. We wait for stops to get cleared, because usually if stops are cleared, it means that a large trader has initiated a lot of demand into the market, and that is the reason why those stops needed to get cleared. The only way those stops are going to get hit is if someone with a big amount of money wants to absorb those orders. It is literally common sense at this point. So what happens next? Well, we got a few liquidity low areas down here, 125.18. This is an old liquidity low we've spoken about before. We have liquidity under 125, and that takes us a little bit further back, right? But these are all liquidity areas that are marked out, and what we're looking for is a rebound back in to fair value. So again, if you're looking to trade, judging by the extension of this market, the market is now trading a deep discount. So what do we mean by that? So we look at the high, we look at the low, and then we can see that this is a premium, this is a discount, this is an even higher premium, right? And this is an even lower discount. So now we're moving away from what we would call fair prices into discount territory. Rule number 2, is there volume accompanying the move? Yes, we have a lot of sell side volume. We can see that from the huge float that developed at 1 p.m. New York Open on the 13th, right? That could have been for a number of reasons. Usually big news information. I believe at 1 p.m. there was CPI. So naturally we had the CPI, and then we had this big flush lower. So again, we've got London Open, well, pre-London, 7 a.m. we see a big flush to the downside again. So the sellers are in control. So now we're moving into deep discount territory. So rule number 2, we check the volume. Rule number 3, are we trading at a discount? Yes, very close to. Are we heading towards a liquidity low? Yes, we are. This is the moment we're waiting for. Now, do we want to trade now? Hell no. The market's going short. The general idea, right? Non-professional traders, like we're talking about professional trading now, right? This is how professional traders look at things. If we are going lower, the instinct for most traders is to go short, right? And they're going short in a hole, as I like to call it. So they're going short, they're going to the bid, they're paying the worst prices at this point, and the market's going lower. That's the instinct of most non-professional traders. Now, professional trader, on the other hand, what do they see? They see the market approaching a discount and they're preparing to buy that market. It is not the same as picking tops and bottoms, right? So for those of you going to come up with this stupid analogy, picking tops and bottoms, this is not the same. That's something that Wall Street made up so that you guys would never know how to trade, right? You're never going to figure this stuff out, right? But don't pick tops and bottoms. Trade. Most of the money is made in the middle or some bullshit. No, right? Sorry, guys. Apologize for the YouTube algorithm. Did not mean to swear, but it is BS, right? It is just BS, right? You know, and I've demonstrated here time and time again that it's BS.
It was all bullshit.
The market's going into a discount. We want to trade in a major session. Now, we do know, whilst this is cable, so London is going to be a major session for it, but the US session is the most major of sessions. We have the New York Open, we have the NASDAQ Open, and we have the Chicago Open. So we got 3 major centers all opening in the US session. So we are looking specifically at what happens in the futures market, right? Which is the Chicago Open. And that tends to happen at 3 p.m. Usually in the Forex market by 2 p.m. because of the NASDAQ Open, you already have a very good idea of what's going to happen. So you ideally should not be putting a trade on unless you have got good reason before 2 p.m. or you've seen a reaction at the New York Open that is giving you the idea that there's some pre-market trades occurring in the futures that are going to play in to the Chicago Open. That's a nuance you're going to have to develop. It will take me a whole nother video to discuss the nuances between center opens, and I'm not going to get into that right now. But again, this will come up time and time again in the Discord server. I will ensure that I leave the links in the description below for those of you guys who want to get involved. Right, so as you can see, we're still chucking lower, right? And it's no reason for you to be trying to get short this market. But again, once we hit those discount levels and we clear the liquidity, then it becomes an opportunity. So let's pop back into market profile, right? So it's exactly the same thing we're observing here, but with a little bit more information. What am I talking about? So in the last video, we spoke about this. We got bid stack going further back. We have another bid stack here, right? So this is the support area, right? So we could bounce anywhere in this level. We have liquidity lows sitting here, right? So we already know that. We also had a gap in value which needed to be filled into this area, and you can see that that was traded down here, filled, and now we're back in trading just into this bid stack here, and we're nowhere near a major US center open. So I would expect the market would either continue to go lower or consolidate. So this is the liquidity low we were looking at on the candlestick chart, right? This one here. So that's our primary objective. If you look what's going on here, this should be the last point of support, right? If we break that level, then we're going to get a further flurry to the downside. And then we look for other liquidity lows that might be more historically relevant. So we're not exposing ourselves to the market so soon before we have evidence this market's going to rebound. We're not in a hurry to short the market, because if you're getting short, what the profile is telling you, clearly telling you, is that you're getting short in the hole. We're running into major support, and if you're trying to short, the chances are this thing could rebound in your face and enter a consolidation just below value, and then chuck lower, clear the liquidity in the US session, and then continue higher. So either way, you're screwed if you're shorting now.
We're doomed!
Doomed! And
let's rewind. Right, so from where we are now, we know not to short, and we can actually see the trade that took place yesterday where we ran up ahead of the CPI numbers. We filled the gap as we've said we would do. We did that somewhat in J period. We continue to fill it up to the upside. And what did I say? We're into minus development, right? Minus development, we're bound to see some selling pressure, and then we're back in. The short position should have come round about here, right? And that allows us to get short on the market back into value, right? And then into the next liquidity low, which would have been the P period low, and that would have been your exit because we're really close now to bids. Now, if we want to go the other way, we're looking for the reversal as we drive lower for a rebound. Guys, this is not rocket science, right? It is not rocket science. We can see a similar example here with crude oil. We again, I didn't really discuss this with you guys, but it's the same concept. We traded a liquidity high here. We have another one above here. So again, this is the key zone, but we have a value high. So my expectations is that this might be the last stop. If we continue to push higher, I'll look for liquidity hunting just in the value high and then wait for a big break. Lower. Again, we're not likely to see this before the Chicago Open because crude oil is a futures contract. So it's going to be traded in Chicago more than it will be traded on any other time frame. So we see a lot more volatility in those sort of OP, Q, and R periods than we would do, for example, in other periods. And we can, this is evident. We can see this, that O period always brings OPQ. Those time zones always bring the strongest movement. So we can see that here. We can see that here. We can also see that yesterday. And today in the London session, we're going a little higher. But then as soon as we enter the US session, this whole picture could change. So once again, just re-emphasizing the importance of trading in major liquid sessions relative to the asset class. So again, if I'm not mistaken, if you were looking for short plays, then we've traded a liquidity high. So if we split this here, we can see that that's the case. And we have offers here. So again, any like S period would have been perfect on the return to be short. And it gives you the best advantage on a trade. Now we could still go up, but then if you're trying to protect yourself, what that does for you is that it allows you to see change quicker and get out if there's a problem. So imagine I'd hit the liquidity in T period, I was short, so let's say about 77, 73. Well, then I'm going to have risk above offers or above value high. So at this stage, I'm basing my assumption that I'm going to get a lister point into the short-term liquidity low, and I'm going to go with that because I can clearly see that we have a bid stack that might act as support. So the chances of us breaching 76.49 in the near term are actually quite low. So this has to be my goal if I'm getting short close to offers. But what I never want to do is be long at a premium or short in a discount, right? Because sometimes it could work out for you, but if you keep up the behavior, you're going to lose money over time, right? Because your trade location is poor. And this is something we consistently talk about in Market Profile. But anyway, guys, I hope you enjoyed the video. Till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?